And lastly, ask yourself, where and when do I want to retire? The answers to those questions are going to help you understand how much you're actually going to need when you're done with work. It's never too late to get started.
Now, before we dive in, just a quick reminder. This video is for informational and entertainment purposes only, and should not be considered financial advice. Our full disclaimer is shown here and on our website. Hello everyone, today we're going to be looking at a few finance TikToks and give our honest thoughts about them. So, let's dive right into some videos.
$100, what do I do with it?
And what's the goal?
So this is a great question. It really shows that the young man is actually thinking about, what to do with money, besides spending it, of course. And he's actually thinking about investing those $500.
Just make more of it.
Do you know what you're going to go do to make more money?
Maybe investing, real estate, stocks.
First off is you just got to pick one. Because if you try to do 3 or 2, it's not a winning recipe. Success leaves clues. If you talk to people that have won and made a lot of money, they will all tell you they did one thing for a long period of time and then they won.
So this is very important. In order to understand investing, you actually have to start one at a time. So you shouldn't try to invest into multiple asset classes before you learn one asset class. So it's very important what he said, where, for example, you want to do stocks, focus on stocks. Really research how you want to invest in stocks. Do you want to do single stocks, index funds, different types of those different kinds of stocks? If you want to do real estate, do you want to do single family? Do you want to do multifamily? There's such a multitude of different ways to invest in each asset class, so it's important to really learn each one.
Just stay with one thing.
Yeah, it's called focus. You know what focus stands for? Follow one course until successful. You got $500, pick one thing. If you go all in and the money goes away and you didn't win, you'll learn so much about yourself. It's worth doing that.
So yeah, I agree there. So essentially there's an old saying, a bird in hand is worth more than two in the bush, or if you chase 2 hares, you'll catch none. Essentially what this means is, if you don't have good focus and try to grab as much as you can on your investments, then you're not going to have any investment at all. So it's important to stay focused on what you have in your hand and not try to see what's out there until you actually have a good grasp of what you have in your hand. So definitely I agree here. So make sure you're focused on what you're doing, grind away, and then you can venture out and do another asset class.
Learn from your mistakes.
They're not mistakes if you learn. It's like falling off a surfboard the first time you surf. Did you fail at surfing?
No.
No, you just learned how not to stand on the surfboard. Get back up.
So let's address the question, what would I do with $500? So there's a couple of avenues you can take when you have $500. The first thing is you can actually invest into the stock market. Stock market has a relatively low barrier to entry, unlike other types of investments. So essentially you could start investing in index funds, single stocks, but just know that investing in single stocks are more risky than investing in index funds. So definitely choose your risk tolerance wisely and then research what kinds of companies you would like to invest in. The next thing you can do is, even though you can't really get into real estate with $500, there is something called a real estate investment trust, which is similar to stock, where essentially you invest into portions of a real estate property, and essentially you get to have the ability to actually get dividends in the form of rental income. So essentially, as the rental property gets, rental income, you get a share of it. So that's a great way for you to start off in the real estate game without actually have to go out and buy a piece of real estate. Another thing you can do is if you don't want to take any risk at all, you can actually go into something like bonds, which are like effectively you can get buy a $500 or $1,000 bond, and then you can actually get interest payments off of that. What's an even safer investment than that is you can actually do a CD, or certificate of deposit, which basically is a certificate you get from a bank. You go out to the bank and say, hey, I want to freeze this for a certain period of time, and then you also get interest from that. So there are a multitude of things you can do with $500, and definitely a great way to actually start your investment journey.
All right, Sanjay, I have $10,000. What should I do with my money?
So I just want to say, getting to the $10,000 mark is a truly impressive feat. There's a lot of people out there that are living paycheck to paycheck, or don't even have $1,000 in their emergency fund. So just want to say kudos that $10,000 is a big milestone, and it's important to ask, what should I do with this kind of money? Because that's actually a good amount of money that you've saved up.
Easy answer. Put it into an S&P 500 index fund and leave it there for the next 50 years. You are young. That is going to appreciate better than any other investment you could possibly make.
Okay. What about Dogecoin?
Yeah, no.
So I would agree with him there, where the S&P 500 is a safe investment. Usually that's an investment in the top 500 stocks that are out there. And on average, usually the S&P 500 tends to yield 7 to 8% on average per year. So especially over a 50-year period, you're definitely going to be seeing those kinds of results. And based on the history that you've seen on the S&P 500, you will see that on average it does trend 7 or 8%. So you're going to have years that are maybe negative percentages, 1 or 2%, but there's going to be years that are 10, 12%. So on average, you will be winning in the long run. So it's definitely important to use the S&P 500 to your advantage.
No, don't put it into crypto. Here's the thing. It's all about asymmetric risk, like investing in NVIDIA right now. NVIDIA could go up another 50%, but it could go down 95%. You want investments where you put in money and it could go up a lot, but it can only go down a little bit.
Is there no stock that you suggest buying like personally, or nothing you're holding personally?
All the worst investment decisions I've ever made have been me deciding to invest in a stock. That's just dumb. You can't beat the market. Invest in the market.
Okay.
So I agree with him there. Usually single stocks are actually the riskiest thing you can do as you invest in the stock market, because you never know which stock is going to really yield the big results. Hindsight is 2020, where essentially like if we could get the Apples, the Nvidias, the Teslas of the world, then we would do it, right? But there are also other stories where people invested in other companies that didn't actually make it big and lost all their money, and then their stocks are now worthless. So it's important to really make sure that you actually make the right decision, because it can really hurt you later. And just to give you a little bit tidbit of information about this, you can only deduct $3,000 of any losses you incur per year in your taxes. So that really puts things into perspective. If you lose $30,000, it's going to take you 10 years to actually get over that.
Yeah, unless you're trading insider.
Insider trading is awesome. This is the reason private equity is so great. Like, why invest in small companies is because I get a board seat. I get to have insider. Like, this is what Warren Buffett does. He takes board seats. He controls those companies. It's a legal form of insider trading, but you can't do that. Not with $10,000.
So just to give a little tidbit about private equity firms tend to invest in hundreds of companies. And sometimes they have companies that are called unicorns. Unicorns are companies that are worth $1 billion or more. And there's plenty of them out there. But for every one unicorn, there's hundreds of businesses that have failed. So private equity companies usually invest in multiple different companies by putting a share of their money. But when they make it big, like the next Google or Amazon, then they make most of their money back, or even more in most cases. So now, what would I do with $10,000? There's a couple of options. So the first thing you can do is you can actually invest it in an index fund, just like you mentioned. And usually that generates great returns, around 7 or 8%. Another thing you can do is you can actually start thinking about, hey, do I want to invest in an investment property? So there are some investment properties you can actually get for 50 grand or less in some areas such as Philadelphia, Albany, all these other kinds of areas. So definitely you can start thinking about if you want to get your first investment property. You could usually get one, and then, with your $10,000 down payment. And then from there, you could think about, do I want to, you look at the rental market and see like what the rental income for that area would be. And as I mentioned previously, you could also do a real estate investment trust, which just in case you don't want to invest in like physical real estate.
Hello everyone, my name is Anthony and I'm the host of the Log Sanctuary. I hope you've been enjoying our content so far. And if you have, please feel free to like and subscribe. Also, we have our website up here, and we also have some socials down here. And as always, leave your comments down below.
I made a lot of financial mistakes in my 20s, but the one I regret the most is not taking retirement savings seriously. And now I'm playing catch up. A good rule of thumb is that I should have around 3 times.
So I agree with him there. Investing shouldn't be something that you start late in life if possible. Because think of it this way, someone who starts investing in their early 20s, even $500 a month, will be someone who have something known as compounding effect. So basically, you will compound a lot more money in your early stages of life than you will in the late stages of life, because you have more time to compound. Now, someone who actually invests like $1,000, let's say in their 30s, compared to $500 a month in their 20s, you actually see that someone who invested less in their 20s will actually have more money at the end than someone who actually invests $1,000 later in their 30s. So the power of compounding is very powerful and something you should definitely take advantage of.
Times my salary saved for retirement by the time I'm 40. But I'm 37 and I've only saved a fifth of that amount. Like many millennials, I entered the workforce during tough economic times, and student loan debt has weighed me down. And I've put money into retirement over the years, but sometimes I've taken it out to pay the bills. Don't make that mistake. If you're also behind on retirement, do not freak out. You still have time.
So I agree with him there. You know, something about retirement is exactly that. It's for retiring. It's not for you to actually use for your current objectives. You should be using that for the long term. Your future self is going to thank you for that. So what you should think about is, like, as you see your money grow in your retirement account, don't dip into it. Just see it grow, you know, make the right moves and make sure you're putting into the right investments, and don't worry about it. It's kind of like, you know, just keep focusing on what you have to do and make sure that you're just using your current money and not your retirement money to actually fulfill your current obligations.
But do these things. First, open a retirement account. And if your company offers a 401k match, make sure you're getting the full amount. Then, set aside 50% of every pay raise you get until you're saving around 15% of your income.
I agree with this completely. So, something a lot of people don't take advantage of is 401k matches that companies give. Some companies give between 2 to 8%, and it's effectively free money that you can use for your retirement. So take advantage of it. Make sure you max it out up to the point, at least, of your company matching those percentages. The other thing that he brought up, which is a great point, is that people get raises all the time, whether it's a 5K raise or a 10K raise. People tend to see these raises as an opportunity to buy more luxurious things. Don't do that. That's called lifestyle inflation. You don't want to actually succumb to this and actually use the extra money that you actually are earning with your pay raise or promotion. Instead, you should be actually using it to invest in your future and make sure you're doing the right moves for the future you.
That's what a wealth advisor told me. And lastly, ask yourself, where and when do I want to retire? The answers to those questions are going to help you understand how much you're actually going to need when you're done with work. It's never too late to get started.
So I agree with this completely. You know, and one thing that you should be thinking about as well is, how much do I need to retire? And depending on the area you're going to be retiring, so essentially if you're retiring in New York versus California, which, you know, of course, both of those are like high income, the high states that you need more money, versus you retiring in a state that effectively has no income tax, like Florida, for example, then you have to think about where I want to retire and how much I'm going to need annually and what kind of lifestyle do I want to live. Do I want to live a luxurious lifestyle? Do I want to live a very modest lifestyle? Depending on your scenario, you're going to be needing a lot more money or even less money. So it's important to really understand where you're going to be and, of course, account for inflation, because nothing stays the same. So even though like a pack of eggs costs $5 right now, it's probably going to cost $20 when you retire. So you must also factor those kinds of items as well. So let's see what we have here. Saving versus investing. So basically he's saving $20 a day and someone else is investing $20 a day. It's 10% return on the right, of course, and there's no return on the left because effectively a savings account doesn't really give you anything. In most cases, savings accounts only give 0.01%. So essentially that's nothing. So as we can see here from the power of compounding, if you start your journey off early, you actually will be having sometimes up to a couple of $1 million after 50 years. And this is only investing $20 a day. So essentially this is very feasible for many people. That's $600 a month roughly. And that's definitely something that's achievable for most people. So I would say definitely investing beats savings any day of the week. So this all kind of wraps up the, not just the fact that investing is important, but the power of compounding is also equally important. And you need to make sure you invest early on in your life when you have the time and the resources to actually do it. When you have the ability to work and the ability to actually make money and invest your money. And that concludes our first batch of videos. So join us next time as we go into more videos. Alrighty, I hope everyone has a blessed day and adios.
Keep doing what you're doing. You're doing an amazing job, and I'm wishing everyone out there all the best. All right, until next time, adios.